Howdy, Jacob here. Today I'm going to do a more in-depth analysis on Harmony Biosciences Holdings. It looks like we got to a price point that was well within 10% of a purchase price, and so I wanted to do a deeper dive. So let's remind ourselves of the company. Okay, so the company, let's look at some financials to remind ourselves. Pharmaceuticals industry, 1.8 billion market cap on under 1.7 billion enterprise value. Haven't been around for a while. They were incorporated in 2017. Revenue growth looks absolutely astounding. Gross margins are crazy. Operating margins 30%, wild. Return on invested capital 20%, looks fantastic. Balance sheet, quite a bit of cash on hand in relation to total liabilities. In fact, we have 354 million in short-term investments and cash and equivalents with 344 million total liabilities, and the cash flow has zero capital expenditures, a lot of reinvestments through acquisition, investment, and share repurchases. So let's go over some of the notes that I have. Just a reminder, before I do this, is that this is supposed to be reviewed in conjunction with your own analysis. So please don't take everything I say to heart. Do what you want with it. You love it, fantastic. Thank you. You hate it, sorry, am what I am. But I'm just going to go over some of the notes that I took from some of the quarterly reports and annual reports, 10Ks, to kind of get a gauge of the business. This isn't 100% in-depth analysis, but again, it's used as a more in-depth analysis from my previous financial review to where we get a better idea of what we want to do with this company. After this, there's still more things to do. And again, where I would invest is not necessarily where you would invest. We're different people, different points of life. The things I'm looking for might be different than you, so keep that in mind. But let's go over some of the notes I have. So their 2024 guidance of revenue is 20% year over year on the low end. So I thought that was a very impressive figure, down from what we are seeing here, but as expected, as you would expect revenue to go up that crazy. They have it is a very new company, incorporated in 2017, so that comes with not a lot of data. So be aware of that and use your discount rate to maybe factor in some more conservatism to where you don't actually know what's going to happen since you don't have a long history to look at. 200% increase in research and development from 23 Q4 over 22 Q4, but only a 7% increase in research and development full year over year. I did want to point out though that 30 million was recorded in R&D in 2022 as a licensing fee to BioProject. So BioProject is what created Harmony Science Holdings, and they just paid $30 million to them and recorded it in the R&D section to get out of licensing fee. So I just wanted to point out that there is a good increase in research and development, which is great because obviously companies in the bioscience industry, their trademarks and such end at some point, and so you're going to have to do research and development to get those new drugs out there to keep making money at a good rate. And sales and marketing was their largest expense in dollars for all of 2023 and had a 23% increase year over year. So just pointing out their biggest expense is sales and marketing. And it was in fact their largest increase in spend. So they're spending a lot marketing their products, selling their products, and trying to get them out to the people. Just want to note that. Not good, bad, ugly, just what it is. They have produced the first and only FDA-approved treatment for narcolepsy that is not scheduled as a controlled substance by the DEA. So that's a positive. I mean, we can see that they're making money, so it is a positive. We see that I pulled the figure to the right from their 10K, and it shows the development pipeline. Pipelines are incredibly important for bio companies, and we see that they don't have a whole lot of things in the pipeline. For right now, their only marketed product is actually this Wakix. And we see that they do have some other things on queue. So their idiopathic hypersomnia did not meet statistical significance, but has a reach of 30,000 patients. So what that meant, from my understanding, was that they're going to initiate a meeting with the FDA to go over next steps. But just wanted to point out that although it is in phase 3, it did not meet that significance to where it's it wouldn't automatically. There'd still be further review and everything, but They're just trying to figure out ways to have this move forward. PWS, their Prader-Willis syndrome, will initiate phase 3 in the first quarter of 2024. So that should be out in the next quarterly report, and that covers about 15,000 individuals, or has a possible range of covering 15,000 people. I basically just wanted to point out that these are possibilities. They're not end-all be-all, but just if these things do go through, how many people are we actually affecting, since we're trying to figure out what should the revenue growth be once the trademark and such on the WACX ends. So their pediatric narcolepsy is to be reviewed by 6/21/2024 and could reach an additional 3,600 younger individuals. That's the expected individuals. Not significant info on your cannabidiol gel. I'm definitely no science expert or clinical expert, but that has a range of over 200,000 people in the U.S. and the EU. So, big range of individuals to be covered there. If that does get through to marketing. Just wanted to point out 3 customers account for 100% of gross product revenue and 1 supplier. So pretty big negative here in the fact that they have 1 company supplying their WAKIX and 3 customers make up 100% of gross product, their revenue. So that's something to be aware of. They're very, I swear I can never think of words on this. They're very particular in the people they have. They have one supplier and 3 customers. So very, very limited there. WAKIX is comprised of 3 patents. One expires March 2030. Around that. 1 in September of 29. The last comprises of 3 parts expiring in April 2031, June 2031, and January 2029. So for my 7-year analysis, basically by that 6th and 7th year, we are going to be seeing these patents expire, and we could see, if these other drugs don't come into effect, a heavy decrease in revenue expected. They don't have an intention to pay any dividends, which for me right now, I enjoy. I want them to be reinvesting back in themselves to try to get those revenue and earnings way up there, and they have a historical couple years of great return on invested capital, so I want them to do that. Directors, officers, principal stakeholders own 64% of outstanding shares. Some people see this as a negative. I could understand where they're coming from, but to me, this means that there's a good amount of ownership in the business to where they're going to do what's right for shareholders. Majority of the time, obviously, you can have different perspectives. Like I said, I have different views on a company and outlooks for what I want versus what you do, but just keep in mind that they're going to likely do their best. 150 million is share repurchase program left, just started and purchased $100 million worth of shares. So that's pretty significant. 32 million in stock-based compensation. So it's way over. They're buying back a lot more than they're issuing shares, which is nice. Net income is down year over year due to 77 million in income tax benefit versus a 44.5 income tax expense in 2023. So keep that in mind. And then 15 million of debt in 2024, 56 million in the following 3 years, and 125 million after. I just wanted to point that out. They have more cash on hand than debt, so really not a big concern there. And so when I put in my new assumptions, I just wanted to decrease some of the margins due to the fact that trademarks possibly going out. And then the biggest increase I have is this discount rate. And for me, this is because they have 1 supplier and 3 customers. That to me is too centralized. They're not diversified enough from that aspect. And so I want a larger discount rate for a larger margin of safety. Hopefully you enjoyed the video and review it in conjunction with your own analysis. And I hope you have a fantastic rest of your day. Thank you.